Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news the downgraded Fitch rating is costing the US higher wholesale interest rates. But to be fair, the benchmark US Treasury 10-year yield is only back to what it was in late October, but that was a post-GFC high. And perhaps we should note a comment by Warren Buffett overnight. He said, there are some things people shouldn't worry about, and this is one. In fact, the latest US earnings season company reports show that there is a definite shift to reinvest rising profits in new projects rather than returning money to shareholders. This is a big shift and a positive sign, probably an indication that the collective corporate view is that they will have no recession and that opportunity abounds there. Meanwhile, US jobless claims actually fell last week, but not by as much as seasonal factors would have expected. Remember, we get the US labour market reports for July tomorrow, and analysts expect non-farm payrolls to grow by 200,000, similar to the June expansion. US factory order data was released for June, and that has come in much better than it has been recently. Despite that, however, it wasn't enough to exceed the order levels of June a year ago, although if you exclude military orders, they are rising. In China, the private Caixin Services PMI has delivered a surprise and a positive one. The official services PMI recorded a fast slowing sector, but this alternative survey paints the opposite picture. It rose in July, back to a modest to a moderate expansion from June's 5-month low, beating forecasts of a further slip. And it was their 7th straight month of expansion in services activity, supported by a small uptick in new orders and a good expansion in their payroll numbers, the fastest pace in 4 months. New order growth accelerated despite foreign demand expanding at a minimal pace, which was its slowest in 6 months. They aren't now getting international orders. India is. In India, new order growth remained high in their factory sector in July, although the pace softened a little bit. However, they reported a near record upturn in services exports, spurred by their fastest expansion in new services business since 2010. Perhaps reflecting the no recession vibe and an uptick in global trade, containerized freight rates surprised last week with almost a 12% rise. Most of this was from outbound China freight to the US and Europe. But we didn't see an equivalent rise in bulk cargo rates. The US Treasury 10-year yield will start today at 4.20%, and that's up 13 basis points from this time yesterday and equaling their October high. And the price of gold will start today at $1,934 an ounce and down $3 from yesterday. But oil prices are back up $2 and just on $81 a barrel in the US, while the international Brent price is $85 a barrel. And the Kiwi dollar starts today slightly softer, at just on 60.8 US cents. Against the Aussie, we're also a bit softer at 92.8 Australian cents. Against the euro, we're soft as well at 55.5 euro cents. That all means our trade-weighted index has fallen another 10 basis points to 69.4. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.